Did you public comments?
Oh,
Yeah. You forget
sorry, I forgot.
What's first?
Public comment, sorry. I'm skipping ahead. It's because Mr. Kraus is rushing me today. He's in a hurry.
I'm gonna save it for later.
Somebody's gotta be time.
I never go over 3 minutes. What are you thinking about? Okay. No, I'm not gonna say anything today.
Oh, no comment?
Not right now.
Okay.
Not right at the moment.
I don't see any other comments? All right. See, I already knew that, which is why we could just move right to.
Sorry for questioning. Okay, so Amanda's here from Mally tonight, and she would like to present the June 30, 2018 audit to you. She has a handout, Mally on the top of everyone's seats, and also you were attached to your board docs. They came out at the end of last week. We had attached the draft entire report, so hopefully if you had any chance to look at that, have any questions on that, now's your opportunity to have your auditor in front of you and to ask her what you would like to know. So, Amanda, it's your floor.
Thank you.
Is she not going over there?
No.
Happy to be here tonight to present the audited financial statements for June 30, 2018. I like to always start by saying we have full cooperation from the staff. No issues, no modifications to the scope of our audit procedures. Everything for fieldwork went smooth and great. The first page of the summarized presentation is just our agenda. We're going to talk about the required communications under Statement of Audit Standard 114, talk a little bit about our audit scope and the timing, and then the financial results. So our required communications, first of all, we're issuing an unmodified audit opinion on the financial statements. That's a clean opinion, meaning we haven't identified any material misstatements in the numbers. We've been auditing the school district for 14 years now, and we're happy to say we've always issued a clean opinion in that time frame. In addition, we've performed what we call the single audit. That is the audit we do on the federal grant programs. So the federal government has charged the school district with hiring an audit firm to audit the federal programs. We're able to rotate what programs we test based on some dollar thresholds and what programs are most significant. So generally, the two programs we hit on a rotating basis is the food nutrition program and the IDEA program. So the IDEA program is the one we tested this year. And again, it's an unmodified opinion. We found no issues in non-compliance or with your controls over your federal programs.
What does that stand for?
What? IDEA?
Yes, ma'am.
It's a state term. Do you know the?
Individuals
Individuals with Disabilities
Education Act.
Yeah.
That sounds correct. And then the last report we present is referred to as the SAS 114, which is from the auditing standards. It's just required communication to the audit committee or the board. And it talks about, we basically say we didn't have any disagreements. We mentioned that there was an implementation of a new accounting policy this year, which I will go into when we talk about the numbers, and just some other items for the board's knowledge. And really, there's nothing in there to report. And we are not presenting a management letter, meaning we don't have any internal control deficiencies to report. So everything's good in that regard as well. As far as our audit scope and timing on the next page, we always start with a trial balance and obtain the supporting account analysis, and all of that was received in a timely manner. We reviewed the district's internal control system and performed what we call walkthroughs, which was looking at least one example of each type of transaction to make sure the controls are implemented as we were told they were implemented. We have no material audit adjustments. There are some adjustments attached to the SAS 114 letter. They were all proposed by the district, or they were for items like OPEB or pension on the food service fund, which are adjustments that we generally make on the school district's behalf. When we test cash and investments, our focus is on the bank reconciliations. We also look to make sure the investments are the kind allowed under state code, and to make sure you have Act 72 collateral securing your your deposits. For capital assets, we look at the material, the larger asset additions during the year. We look at the invoices and make sure that those are properly capitalized. We also review depreciation expense on a sample basis. For accounts payable, we focus our attention to make sure accounts payable is complete, meaning we're looking at all the disbursements after year end through the date of our fieldwork and making sure that those expenses are recorded in the proper school year. So if they were for costs incurred in the month of June, we make sure that they were recorded in the 17-18 fiscal year. For the long-term debt, we focus our attention on there by confirming the balances with the bank. Revenue, similar, we send confirmation letters out and perform reconciliations. And expenses, we test expenses via pivot tables. We're able to perform a little bit of a disaggregated analysis on the expenses that way. So where a lot of auditing firms will just pick 40 expense transactions to look at, what we do is analyze the accounts first. It allows us to focus on maybe, let's say, the month of December for a certain repair and maintenance account is higher than all of the rest, so we'll pick something in that month. So we're testing the same amount, but we're able to focus that attention on areas that look strange or unusual rather than just picking a random 40 transactions. And the ability to do that is a lot based on our use of data extraction, which is the next item, and we have a list of different tests we perform using our data extraction software. The benefit of the data extraction is generally that we're able to test more transactions, again, versus sampling and just pulling 40, we're able to look at a lot larger data sets using our software. So some of the key items there, we do perform a payroll analysis. We're looking at the W-2s, making sure nobody was paid significantly more than, let's say, their job title would say they would be entitled to, or that there weren't big swings in the wages from one year to the next, or if there were, we obtain the explanation why. We perform our journal entry testing using data extraction, and also we look at the employees, whether there's any duplicate direct deposit accounts would be a good example, looking for nepotism and potential conflicts of interest. Getting to the numbers themselves on the next page, letter A, the first section is your government-wide financial statements. This is the set of financial statements that the intention is to look at the district almost like you would look at a for-profit company. It's the full accrual basis of accounting, meaning your long-term debt is reflected, your fixed assets are reflected, and all of the other long-term type transactions that aren't necessarily reflected at the fund level, which is how you review your financial information throughout the year. So the main items to highlight, your cash and investments at the end of the year ended at $60,828,000. That's up about $3 million from the year before. Your capital assets overall represent $154 million, and it's important to note there, you are about halfway through the useful life of your building on average, and that's everything put together. So it's good to see if we get too far along the life of those buildings, we know that you're going to have some significant repairs and improvements coming up. If it's not very depreciated, then we know everything's new. So right now you're right in the middle on average. Accounts payable, $15 million. That's consistent with the year before. Your long-term bonds payable and lease obligations is $92 million. The two items under liabilities that we should spend some time on are the last two, other post-employment benefits and the net pension liability. This represents $250 million or so of your liabilities. It is not bonded debt that is going to require payments. It is a liability that's recorded based on evaluation for costs that you would incur if the theory is if everybody were to leave tomorrow, how much would you pay out in pension and health care costs to your retirees? So when we look at that liability, it's not something you're going to have to turn around tomorrow and pay, but it's required to be booked on the GAAP basis of accounting to reflect that full accrual liability. The pension has been around. If you look at that net pension liability line, you can see the big jump of almost 180 million back in 2015. That was when the new pronouncement for pension was adopted. Similarly, this year, we've adopted another standard for the other post-employment benefits that required the same thing. PSERS provided a liability number for your portion of the overall state OPEB costs, and also Pennridge has its own single employer OPEB plan that obtained a valuation and was recorded as a liability. So you always showed a liability of 5.6 million under the old method. This method encompassed a full valuation, so it was a different way of looking at the number, thus the large increase in the balance. So it went up to $17.8 million this year. And your net position, which is the difference between the assets and the liabilities at the end of 2018, was a negative $91 million. And again, that's really because of this $250 million of OPEB and pension costs that have been recorded over the past couple years.
I'd just add with the OPEB change, it's not that the board did anything differently as far as offering any additional benefits to employees. It is just the accounting method of determining that,
Yep.
right?
Yep, the pronouncement's been out for a couple of years, and they picked June 30, 2018 for the year that these liabilities will be booked. You're in the same boat as every other school district, every other government agency. They're all still getting used to their pension number and now looking at another big number on their balance sheet.
Is it additional things that were added into the calculation, or is it just a different way of calculating?
A different way of calculating it.
Okay.
Yeah. It's taking into account healthcare cost trends and whether somebody's going to stay married for a certain number of years and that spouse would need to be covered. So there's a lot of, it's an actuarial valuation. A lot of things go into it.
Thank you.
The next section, your statement of activities, is your revenues and expenses, again, in that full accrual government-wide basis. A couple changes to highlight. Your property taxes are up a little bit. There was a small increase in the millage rate during the year. Your other taxes, which is mostly your EIT and transfer taxes, remained fairly consistent, as did your grant revenue. Both are up just a little bit. Your investment earnings, the market did a lot better this year. So you can see it's 900 grand compared to only 300 the prior year, so that was good. And expenses likewise increased along with the revenues. There you're looking at, everything from increased salary costs and healthcare costs. The pension rate increased. So overall, you're looking at a change in net position of $2.3 million. The next section goes over the governmental funds, in particular the general fund. We've highlighted some balances, mostly the fund balances there. In total, you have $16.5 million in fund balance in the general fund. 9.3 of that is unassigned. So your unassigned is about 7% of your annual expenditures, which is right about where you want to be. And we're showing net change in fund balance of 0 in the general fund, and that's because the surplus of $3.9 million is being transferred to the capital projects fund. On the food service fund, we're going to see some negative numbers here as well. The pension and the OPEB, because you have wages in your food department, a portion of those liabilities gets allocated to the food service fund. So likewise, their net position reflects a negative starting in 2015 when the pension standard was implemented, and that net position grew even more in the negative this year as we added some OPEB. Overall, the change in net position for the year was a loss of about $42,000. There's a hefty amount of depreciation in there and some other non-cash items. And lastly, the budget versus actual. We're not actually presenting the numbers. It's in the financial statement, page 63, if you wanted to take a look. Overall, what we're seeing is that total revenues came in over budget by about $2.4 million. Most of that was higher collections in your real estate taxes than expected, and some of those other tax areas on the local sources. On the expenditure side, your actual came in $1.8 million below the budget, And that would just be due to slightly lower salaries and other costs than what was expected when budgeted. Are there any questions on the numbers?
Could you repeat what you just said? I didn't hear the revenue change.
The revenue change was $2.4 million higher than the budget, and the expenditures was $1.8 million lower than the budget. If we've provided the whole financial statements. It did grow quite a bit this year, 10 pages longer, thanks to the OPEB. A lot of disclosures that describe the whole valuation method.
Does anyone have any questions or anything that you'd like Amanda to dive into any deeper, or anything you'd like explained further?
So the difference between what was budgeted and what came in was basically that $3.9 million that ended up getting transferred to the capital funds, correct? Capital fund?
Yeah, overall you budgeted for a deficiency of about $300,000. So yes, that surplus was pretty much the overage.
Thank you. Do you guys have any questions? No? All right,
Everybody okay?
I think everybody's good.
When will we see the paper copy?
Next week.
Next week. Yep.
Yep.
We'll have an electronic copy that we'll put on your library and board docs. We'll also have a number of the bound copies. I know, Doctor, you like to have a bound copy. If anybody else wants a bound copy, be happy
I'm old and
to.
I'm a paper person.
No
What can I
problem.
say?
No problem. I'd be happy to, provide a paper copy, but we'll make sure that when we have it, that you'll have your final copy electronically. We'll put it on the board docs. Jackie will put it in the library, and Dr. will get paper copy.
And the documents that we're going over tonight were all public view, right? So the public could view those before tonight too, right?
Republic.
Yeah,
Yes.
yeah.
Mhm. Yep.
I'm logged in, so it's hard to know if other people
I
can see it
understand.
too.
Yeah. Right. Yep.
Perfect, thank you.
So, but the one that is on there tonight is marked draft.
Right.
Because Amanda had to come tonight and do this before she makes it a final copy. Is that fair enough?
Yeah, yep.
Okay. Mhm.
Yeah, the idea is we get board approval, and then, and the signed letter is,
Right.
normally I take that back, and then we just process from here.
Yeah.
Okay.
So the signed letter she's talking about is the management letter that Dr. Bolton and I signed, saying that we followed all the procedures, and
They told us the truth,
Gave
all
you-
that good stuff.
so,
Under oath and.
under
Yeah.
the sworn, yes.
Make him sign his life away.
Yeah, so. Okay,
thank
thank you
you.
so
Can
much.
I ask a question or two before she leaves?
It's up to you.
I'd hate to make her stay.
Well, that's the whole point.
Yeah, you can, yeah. Look,
Can you describe, you gave us a clean bill of health, which I'm happy about, on internal control. Can you tell me what internal control items specifically were reviewed?
Well, I don't have
And
my
I'm
work,
I'm particularly concerned about cash.
okay. For internal controls on cash, we review an example bank reconciliation. That's a big item, and we make sure they're following their procedures for the reconciliations. And with most of the accounts pooled, that's generally just one big account, so. That would be the main control over your cash balances. As far as the ins and the outs, on the cash receipts side, we again look at one transaction and make sure it's implemented as we're told. Disbursements, same idea. And then when we test the expenditures, we also look for the approvals. Does that answer your
What
question?
about handling cash?
Handling cash?
Yes.
You mean like the athletics and some of the smaller items?
Yeah, I mean, if we have 5,000 people up here, well, we won't have 5,000, let's say we have 2,000 times $5 a head paying customers, that's 10 grand.
I can tell you, specifically to the athletics fund, we do review at least one event for the year. We make sure they're tallying the tickets and reconciling those to what's deposited.
And can you tell me what event was,
I don't have the record in front of me.
okay? Thank you.
All right, thank you very much.
Thank you.
Appreciate your time. All right, we're gonna move on to contracts for approval.
Thank you. Yeah, yeah.
Mr. Albert?
All right, the first contract is Learn Well, and this is a educational services contract for a student in a medical facility. As you know, when a student's placed in a medical facility, the district is responsible to provide the education to the student. So the cost there is $45.50 an hour. The next two at Kids Peace are the same situation, students that are in a medical facility, and we are responsible for payment for the education of the child when they're in that facility. D is a student that is placed for in emotional and educational services. This student has been placed in this same situation since October of 2017, so this is the contract for the new year. E is another student that needs to be placed for same type of issues, and this contract is to add a one-to-one aide to support the student in order to help the student through his or her severe issues. F is an additional 25 people to the ALICE training website, so we have to pay per student or per employee for those to have access for those ALICE training. G is an MOU for us to begin a Special Olympics program here at the high school, which is very exciting. The high school administration and Dave Babb have been working on this for quite some time, and it's nice to be able to say that we're going to have this program and have something for those kiddos and have the program. So it's pretty cool. And really, there's very little cost to us as far as outgoing. It's our time, our effort, things like that, our administrative time. So it's, and I think it's something that everyone's been very happy to work on. H is Bucks County IU. This is the truancy services agreement. Remember, we had this last year, and it's services that the IU is providing to the districts on an as-needed basis. So we put the contract in place. Then if we ever have a situation that our truancy folks can't handle or need help with, we have additional services at the IU that we can call in, but we only will use them as needed. And so this was new last year, and I remember last year we talked about about this being a new offering from the IU for our services. Now we're getting into some field trip stuff. I is Beaver Tourways, transportation for 9th grade class. This is a volunteering, or it's not a mandatory trip. It's if the students want to go or not, down into Philadelphia to the Seaport Museum. and that would be parent paid or student paid. J is North Middle School, Lehigh Valley Iron Pigs. They go there every year since I've been here, and that again is also parent or student paid. K is something new. This is ClassLink. This is a software, as I understand, will allow us to have a single sign-on, and we're going to start this at the elementary school level. A lot of the time is taken up at the elementary level, getting through the numerous sign-ons that we have to get through to get to the kids to where they need to be. And I know this is something that we've been looking at and working on. So this is something that effective January 1st, they'd like to get started, or January 2nd when the kids come back, to get started at the elementary level, and will allow a single sign-on. The kids sign on one time, boom, they're into everything they need to be in. So it's our curriculum folks, our teachers, our technology people are very excited about this and hope it works there. And if it does work there, then we're going to expand it elsewhere, to the other levels of education. So, okay. L is the Museum of American Revolution, another trip that we've been doing for the last couple of years since that opened in Philadelphia. This is the 8th grade trip at North, or the 8th grade class at North. And then M is an additional Learn Well contract. And again, this is another student that's in a medical facility, and we are responsible to educate. So that's our contracts for this month.
Thank you. Any questions?
Yeah. I happen to be scanning this last one, showing the American Revolution, the museum.
Okay.
Deposit required by 11/15. I mean, are they already going down this road? I'm just kind of curious if there's any impact there. That has a.
Oh, you mean because we won't vote on it till after?
Right. See down in the summary plan?
Yeah, yep. I do see that. I'll check on that.
I don't know if that gives us any heartburn in that.
Right, I mean, it's an every year trip, and it's paid for by the students.
I just would hate to see us be penalized missing that
By
date.
missing that date.
Yeah.
So, all right, I'll check with that, and if we have to meet that date, then we'll meet it, because I don't see any issues with anybody.
No, it just happened to catch my eye.
Thank you for catching it, for seeing it, so we'll check on that. We'll make sure it gets taken care of so the kids don't miss out. So,
Any other questions? No? All right. And next up is the update on the UBCTS funding formula. Dr. Yarnell.
Thank you. The two members of the board who have already seen that, Ms. Kildare and Mrs. Dolan are not here tonight, so I don't have to bore them the second time around. Maybe that's why they didn't
I don't know
come.
if they've abandoned you, Peter,
Probably,
or.
yes, people do that all the time. So, first of all, in the sense of transparency, one would hope that this was a shot of Nakamixon. It is not. It is actually from above a fire tower in the Adirondacks. That's where we spend our summers if we can. This is the lake, Canada Lake, that we spend those summers on. And this is an actual picture of October, taken by a drone, not funny. And then at the end of the presentation, you'll see the picture that I took and the difference in the flow between the two. So the Articles of Agreement are what control sort of the governance of the Upper Bucks County Technical School. The school was established, actually originated in 1962, and these Articles of Agreement were actually agreed upon on August 7th of that year. They are, as part of the Articles of Agreement, there is an indication that the Joint Operating Committee should review these every 5 years. Review does not mean change. There needs to be a distinction between those two words. And below are the revisions that have been made. You can see in recent years, it has not been revised very often. And part of that is the rules of the road, so to speak, which I'll explain as we go along. I've taken specific pieces out of the funding form, or out of the Articles of Agreement that relate to the funding formula. In Section 9, there is this clause that says that the operating expenses at the UBCTS will be borne by the school districts, the three of us who participate, proportionately, and they're done using a 5-year average of the daily membership of the pupils from each sending district. That's intended, I believe, I wasn't there when this was done originally, but I believe that's intended to even out the changes in numbers. And as an example of that, this year, the number for Pennridge jumped a significant amount. So that will affect the funding that we supply. For the capital expenses, this is another section or part of that same section of the fund of the Articles of Agreement. Capital expenses are borne by the school districts proportionally to the most recent state equalization tax board numbers of the market value data. So it's a very different number, as you can imagine. Yes, I can, hopefully, yeah. Yeah. Basically, the decision, the original decision, I don't believe this has been amended since that original Articles of Agreement was put together in '62, but the original decision was to run the operating expenses through basically student membership on a proportional basis and run the capital expenses through this market value. As you know, Pennridge...
This is how we ended up paying, what was it, like $12 million of a $26 million renovation?
Yes, we pay roughly, it changes from year to year, of course, but roughly 47% of that burden comes to Pennridge. And yes, our share was 11 plus million of the 20, I think it was 4 million, that was used to provide the funding for the renovations that were done at the
And
vocab.
that's basically because our real estate value is higher? Is that-
Much higher.
That's really why our
Yeah,
share is
yes,
much. So
yes,
it's
it
based
is.
on-
Exactly. I'm sorry?
Katie's on
Okay. Well, she's heard this, so I don't, maybe she wants to hear it again, but I wouldn't bet on it.
The theory with that is it's long-term,
Yes.
so that's why it's based on a market value rather than a number of students enrolled.
Well, right, but you could have a
Student.
long term of student, what
Yes.
you've been contributing over 10 years and average that rather than the value of your properties, which has
Sure.
absolutely nothing to do with how much of the tech school you're using.
This has to do with the, Section 4, relates to the annual operating budget. And some of the key provisions here are that the joint board, the JOC so-called, has the authority to, the joint board is all 27 members of the 3 sending districts, has the authority to acquire a site or sites. Now, only one site has been acquired, that was obviously years ago. Adopt the annual operating budget, which I put in red because that's what we're really discussing primarily, and approve the capital expenditures for building and equipment, which was, of course, what was done back when the renovation was approved. And I might note that approving that renovation took years, probably almost 2 decades to actually approve, because inevitably, one sending district wasn't prepared to fund that money.
Wasn't that partly because Palisades wanted to save the money and not have to borrow money so that they could pay for it?
I don't think that was the what held it back in previous years. Palisades did pay for it in cash.
Right.
They took it out of their fund balance. Now, Palisades' share was about $4.5 million, $5 million, something, so it was a lot less than what either Quakertown or Pennridge was paying. But yes, that was part of the issue, but not necessarily the issue in terms of the long-term. There were times when Quakertown didn't feel that they could pay whatever it was that it would have required, or we couldn't agree among the 3 of us on what renovations were supposed to be done. It can be difficult, even with 3. I can't imagine what goes on in places like the LCTI up in the Lehigh Valley where they have 17 school districts involved. It must be a fun meeting every month. In terms of the joint board, the approval, and this is pretty key, the approval of the operating budget requires the affirmative vote of 2 things. First of all, majority of all the school districts, there are 27 of us normally, so it requires at least 14 affirmative votes. and a majority of all, of each of two school districts. That would be 5 votes from each of 2 school districts, and then a majority of the total school districts, which is 14. So there are 2 components to this. And generally speaking, that has not been an issue, but it does require both of those to be approved. If someone is absent or abstains, that counts as a no vote for, effectively, because it's only a matter of majorities of the 2 parts here.
So if you're saying 14 and there's not, so
27 of us all
you
told.
could have one whole board of 9 vote.
And you have to have another board of
And
5.
then another board of 5 vote.
Right,
then
and one
you
board
have
can,
one entire
in this
board
case,
say
the
no.
one board could completely either say no or abstain or not be there, and the budget would still pass. And I can't recall that ever has happened in the last 20 years, but there have been times when a board has certainly not been majority approval. Only 2 of the districts approved it by majority. Let's see. Amendment and termination. This is section 21, and it requires, again, an affirmative vote of a majority of all the school directors of each school district in order to either terminate, which I think is unlikely, but amend is the key here, because the amendment is what we're talking about in terms of if we want to change that funding formula or either of those funding formulas. All right, there is a gentleman's agreement that was a consequence of Act 1, our famous 2006 limitation on property tax increases for school districts and the index value that's published therefrom. That was that none of the school districts wanted to absorb the numbers greater than the Act 1 index in any given year. And this was particularly true during the recession years of 2009, 2010, 2011. So this came into play and is still part of what is considered each year. It had some serious unintended consequences, which we are now facing. And as I say, it was established to limit the value, or limit the increase of the individual school districts as well as overall. Okay, the unintended consequence. Generally, one school district of the 3 sees an Act 1 index increase. This coming year, for instance, it would be 2.3%. And the recipient of that 2.3% may well be Pennridge, as I see the early numbers. That's still to be determined, but this past 2, 3, 4 years has been Quakertown, because they chose to send 9th graders to the vocational school, I think maybe 4 years ago, some time ago, and that obviously bumped up their numbers and created just that effect. And then the second part of this is that the other 2 school districts typically see decreases in funding, and we saw that this past year. A big decrease, actually, $228,000 or something on that order, don't quote the number. But it was a big decrease, and that was because of this gentleman's agreement and the overall percentage increase. And I'm going to show numbers later to really bore all of you, but the percentage of the revenue from the 3 sending districts overall has declined. This is a part that is very worrisome to me. In years ago, before this came to play, the school districts funded roughly 85% of the revenue at the vocational technical school. Now we're funding closer to 70 to 75%. The problem is making up that difference, right? Because there aren't a lot of other serious revenue streams that accrue to the vocational school. At least not to the general fund. And what we're really talking about here is the general fund. I mean, they, like here, have a cafeteria fund, they have a production fund, and capital projects and various things that this doesn't apply to. But we're really talking about the general fund, which far and away is the bulk of what's expended and the revenue that you're looking for at the school. Okay, to the numbers. Starting in 2007, this slide summarizes the budgets, the increases, the contributions from the schools, the contribution increases from the schools, the Act 1 index, the fund balance that was budgeted to be used, and the fund balance overall. And, there are some trends here. First of all, what happened, because this is when the Act 1 Gentleman's Agreement came into effect, you can see in 2007 and 2008, school districts actually overall contributed less money to the VOTEC than they had in the previous year in 2006. And then later it increased somewhat. At this point, the Act 1 index was quite high. So the overall contributions were still fairly robust relative to the increases in the budget at the vocational school. You can also see, for many years, the VOTEC didn't have the mechanism to have a fund balance. That was changed back, I think it was the revision in 2001. It was put into the Articles of Agreement that that could happen. And there was a fairly large fund balance built up. I will tell you that a lot of that money came from the sale of the airport property at the Quakertown Airport. There was an aeronautics program that was very successful technically and very unsuccessful financially that operated out of that airport for many years, and eventually the JOC decided to close it. There was property involved as well as just the program itself, and the sale of the property resulted, I think it was a $1.7 million contribution toward the fund balance. So most of what you see there in the bottom line came from that sale of property. These are the next 4 years. Same variables and same information. You can see the budget is growing. The budget increase depends on the year. In 2014, it was small. In 2011, it was 3.5%, higher than the Act 1 index. In recent years, there's been an effort to keep it under the Act 1 index. Again, you can see that the school districts were contributing a little more money, but not much more money. And so that differential between the budget and the school contribution continues to grow. I don't have the percentages there, but if you looked at that, that would be the 85% slowly nudging down toward the 70-75% number that I mentioned. The fund balance has grown through this period and is now, as of 2014, about $3.5 million. This is the most recent period, obviously from 2015 through to the 2019. And by the way, when I say 2015, it's the school year that ends in June of 30th of 2015. I've just shorthanded it, which is also what the UBCTS finance person does. So I'm accustomed to that, and I apologize. I should have explained that up front. What you can see from this slide is that the school contribution increase is not an increase. It's a continuing decrease, and this past year it's 4.16 that decrease is headed for. Obviously, at the time these slides were put together, they didn't have the audited fund balance. That's why I've put the 3.367 number down there as an estimated number. Clearly, the 2019 hasn't come to pass yet, so we don't know what the fund balance will be at the end of the year. What you can also see here is the budgeted fund balance numbers are growing dramatically year on year. And it's a roughly $9 million fund, or $9 million budget, of which $1.5 million, more or less, is being budgeted as fund balance. That's a hefty percentage, as we all know, right? That's about 16-17%. So.
But it seems but overall, it doesn't seem to be taking away from the fund balance, well, a little bit.
Now it is,
Fund
right?
balance is
For
pretty
years it
much
didn't, but now we've begun to bite into it. And what that means is that the revenues have not kept up with the expenditures at the VOTEC the last 2 years, and probably won't this year either. Hasn't been a big number, but that's my concern, Megan, exactly. That is going to continue to grow because the system isn't set up to do anything else. You know, it's a mathematical difficulty without reducing the budget. And the budget, as you can see, has grown, but not dramatically over the years recently. But unless you reduce the budget, you're going to continue to do that. Bill?
Peter, as I recall, that growth in the budget is primarily salaries and healthcare.
It's actually primarily healthcare. The healthcare number itself was $200,000 this last year. If you look there, the growth was $247,000. So almost all of it is in healthcare. The vocational school, of course, has a very limited number of employees, I believe 50-some total. So it's not a very large group. They entered the consortium that the IU did, and they haven't fared well in the consortium, frankly. The increases, they get increases year on year of as much as 28% increase, so it was really tough to swallow. They have now moved to, maybe Sean, you can help me, Del Val, I don't know what the name of the organization, but a different consortium, which is saving them some money, no doubt about it, but it's still a tough issue.
I remember the
Yeah, I
preliminary
know.
look at that, and it was huge.
That's absolutely a big part of this. I mean, salaries have grown too, but not to anywhere near what the healthcare has grown.
He also had a decline in Beezer's costs.
And that's also in there, yes. So yeah, actually, they have cut some of the other costs, right? But
Yeah, just to make up for those.
for instance, one of the things that happened, the custodial work at the vocational school in the last contract was outsourced. And that saved a sizable amount of money, even though it was only 4.5 people. But it saved some real money. But, you know, there's a limited amount of things like that you can change. And some of them are contractual. Okay, funding formula proposals. There has been the proposal that capped at Act 1 with no decreases. That actually was done 1 year. What that did was, or what that would do, was add to the one school that it has the largest increase in ADMs, basically. That was Quakertown. And this shows what the effect of that would be. There would be no change in the contribution from Palisades, no change in the contribution from Pennridge, but a $71,000 additional contribution from Quakertown. Capped with the Act 1 gentleman's agreement is the left-hand column, and that's what actually happened. And you can see that the amount that the increase was actually a decrease. The red numbers in the negative are decreases. The Pennridge number contribution decreased 238, almost 239,000. Now, to put that in perspective, we had almost the exact same number of students this year as we had last year. So, on the ADM average, I mean, not specifically. Next year, that number of students will increase. It is increasing, so that'll change that formula somewhat. But that's what actually happened. The Quakertown increase was 2.4% because that's what the Act 1 increase was, and that resulted in this $1.489 million budgeted fund balance usage. With
Didn't we have the floor in there, so then we didn't actually get that decrease, or was that the year prior?
That was a prior year.
That was the prior year. Without the cap, this is what would have to happen to fully fund the districts to fully fund. And as you can see, the fact that it would require an $820,000 increase from Quakertown, 27.7%, that won't happen because all 3 school districts have veto power effectively. It's a little bit like the Security Council at the UN. The districts have veto power, and no one is going to accept that kind of increase in a single year.
What do you mean by that? Because I thought you said that 14 people could approve the budget, right? And it was a gentleman's agreement. Did anyone have?
The budget, but the funding formula is not, that requires the 3 sending districts to approve the funding formula.
Right, but the 3 sending districts never voted on it, did they? Because it was a gentleman's agreement. So isn't the funding formula still what it was originally?
The funding formula is what it was originally, right? The budget is voted on by the JOC first and then presented to all 27 members, and they vote on whatever the budget is that's recommended to them. If they don't approve it, then it goes back, and the JOC and the administration at the VOTEC have to revise it.
So they voted the budget through 2 years ago without when our board voted it down.
Yes.
Essentially, the same thing could happen to any board.
Yes.
2 districts could vote it through, and you wouldn't really, you would already be if you passed the without cap, you would still be in compliance with the funding formula because the funding formula was never changed. The gentleman's agreement didn't
No,
change it because no
you're
one
right.
voted on it.
I can bet you, and will bet you, that Pennridge will not approve a $315,000 increase.
Right, to us.
Well, if
And
that's
Quakertown
what
certainly
it
won't
was.
approve the $820,000, so,
Yeah.
you know, they're your 2 districts out the window before you start.
Well, unless Pennridge did approve it.
And frankly, Palisades may not approve a $92,000. I mean, everybody gets hurt in a way. You can see, it's a 10.9% increase for Palisades, a 12.7% increase for Pennridge, and a 27.7% increase for Quakertown. I use this as an example. I don't think any of the JOC members would agree to this. I can be wrong, but that's my assumption.
So your numbers are fairly close there, Peter, or they're right on. So the 1.1 in fund balance budget, what's left in the fund balance up there? Because I know we were concerned.
3.367 was at the end of June,
Okay.
without, unaudited. It wasn't the final number, but it should be close to that according to Mrs. Capuano, the business manager.
Okay.
So, yes. There still is a healthy fund balance there, but it's going to decrease unless we do something.
Excuse me, are those hypothetical numbers or are those
What?
on the previous slide?
Those are real numbers. I mean, the real numbers are at the left. That's what actually happened last year. The other two are not actual numbers in the sense that they were never passed, but they are what the numbers would be with those constraints. So I don't call those hypothetical, but I suppose you could.
So the middle column is what happened the year before, basically.
Basically, yes, but it would have been different numbers, but it's
Right.
basically the same
Sure.
concept. Yes.
I don't want to insert myself too much, but I need to understand those numbers.
Okay. The comparisons. Here's what the situation is. The current formula and the current enrollments are at the top, right, in the top line. So those enrollments, and these are ADM averages. Please remember that. So these are 5-year rolling averages. They're not this year, they're the past 5 years. Sorry. So Palisades obviously has the lowest enrollment, has for many years, it's 88. Their percentage that they pay under the current formula this past year was 12.87% of it. We paid 38.89. We had an average of 266 students. Quakertown has had an average of 330 students, so they're paying almost half, 48.25. There was a proposal to go to eligible enrollment. What eligible enrollment means is you base this on the total number of students at each of the 3 sending schools' high schools. So if Pennridge has, as we did this year, 2355 as our enrollment at the high school, Palisades has 603 and Quakertown 1665, then you divide that up. That would result in quotas, where Palisades would pay for 89 students, Pennridge for 348, and Quakertown for 246. That would shift this whole thing dramatically, obviously, toward the Pennridge numbers, toward being more than half of the total cost. This is not who goes to the VOTEC. This is who's eligible to go to the VOTEC. This is a proposal that has come from the 2 other sending districts.
So the idea is, I mean, look, here's the reality. The funding formula we have right now is already fair, but people don't want to pay for it. And so let's figure out a different formula because, and there is no formula. You can't wave a magic wand and not owe more money. I mean, the reality is this is what it costs, and we either need to pay the bill or not. And right now it's, well, I don't want to pay for it, so let's see if there's some magical formula out there that will make me not have to pay for it. And all this does is say, you know what, let's change the funding formula so that Pennridge will pick up the whole balance so that we don't have to pay for it. And it's the same thing that happened with the capital, you know, with how they fund their capital projects, which is how we're funding the majority of that. I mean, I don't think that it's appropriate for Pennridge to continually, this is the fair formula. I think if we want to look at making things more fair, it's the other formula we should look at, because that's the formula that's not fair. That's based on real estate.
And the difference is, I don't want to get into the capital budgets formula, because that one is not one that is creating a budget problem.
Because it did, but Pennridge didn't do anything about it, because really it created a problem for us when we had to borrow the money, the majority of it, when we funded it. But Pennridge
We knew what the formula was, we could have said no.
Exactly, but that's my point. It's when we're the ones who are getting kind of, you know, when we're the ones who are picking up the cost of it, we suck it up and pay for it. And now that it's a different district that's getting hit with the cost, it's kind of, well, let's reorganize it, because Pennridge picked up the costs on the other formula, and they picked it up in the capital project, so let's do
I
it
don't think it's
again.
that simple. I really don't. And one of the reason I would say that is, first of all, there are schools that do fund their vocational school this way. So this is not an out-of-the-blue kind of new idea. This is something that's taken from other places. The other thing that is factual is that the first time I heard this proposal was in 1998. So it's been around for a long time. That, you know, some people want to do it a different way. It's just, you know, and I don't disagree with you that I think the current formula is a much fairer, but that's not what everyone's view is. And I'm presenting this because we're trying to negotiate a change, and obviously we have to get buy-in from all three parties. It doesn't matter what it is to change it. The other thing is it'll stay as it is. And sooner or later, what will eventually happen is that the revenue and expenditure numbers will be enough out of sync that 1 year, the vocational school is going to come back and say, we don't have enough money to pay our bills. Sending schools, you've got to give us more money.
But the problem isn't with the funding formula, the problem is that people aren't paying. If you go back to the slide you had before.
Right.
The funding formula means we should have been paying this, and we're actually paying that. And so the problem isn't the funding formula, the problem is it's compounding, because since the gentleman's agreement
Yes,
got put in
absolutely.
place,
And that was-
people haven't been paying their bills. And so the longer you don't pay your bills, the bigger and
Right,
bigger it gets.
exactly. No, that's exactly right.
So I don't think the funding formula is the problem, I think it's.
Well,
you
the
gotta get-
eligible enrollment, can I just ask, I don't mean to interject, but your eligible enrollment numbers here for each school. The eligible enrollment for, am I correct, that Quakertown has more eligible enrollment because they add in more grades?
No.
How does that
The
work?
eligible enrollment numbers are actually all students that are enrolled in a given year at
Okay.
a given high school. So in Quakertown, there are 1,665
all of the
students,
students.
9 through 12 at their high school.
So 9 through 12, 1665 is
Right.
their total number. That could go.
Now, of those,
Except-
currently, roughly 330 go to the VOTEC, so about 20%. At Pennridge, the number of students at this high school is 2,355. Of those, 266, more or less,
Okay.
go to the VOTEC, meaning that it's only like 11%. So there's a big difference in the percentage of students we're sending. Some of that is educational philosophy. It depends on what the school district decides they want to do in terms of who they send to the VOTEC and who chooses to go to the VOTEC, because obviously it is a choice that students make. Sometimes their parents want them to go there, sometimes they don't, but that it enters into it too. It's
Okay.
who chooses to go.
So because we're a larger school district,
Right.
there's more students in our high school, we pay more of the bill, even though we're not sending as many kids to the high school.
Right.
Which doesn't make sense, because
I agree, that
we're
doesn't
paying
make
to
sense.
educate those students here.
Right.
We shouldn't also be paying to educate the students who aren't going to
Yeah,
the Texas.
it's like, yeah, it's
We're
like
paying them double.
potentially, yeah, I agree, that doesn't make sense to
I
me.
have a question about this also, Peter.
Sure,
So on the quota
yes.
piece of this, is that a maximum number of students that a sending
Well,
district would be allowed to send?
If we reach full enrollment, that is the case.
So,
We are not there currently, Bill. We are at
understand,
720, I think, which will decrease over the year because we do lose some every year. But it was like 720, I think it was 721 enrolled this fall. The quota, the actual full enrollment is, because there are quotas for each of the individual shops or operations, is somewhere in the 850, 880, so we're not bumping into it. We are bumping into it in certain places, and there is, in the Articles of Agreement, there also is, which I didn't highlight tonight because it's not part of the funding formula, but there are quotas for how many students can go into each of these programs.
understood.
And we have a real problem, a good problem in many ways, but a real problem in the animal technology area. For years and years, that has been oversubscribed. This year, the quota there is 40 students, 20 in each, in morning and afternoon. We had 61 who wanted to enroll.
And do we get a certain, and so we.
And we get a certain number of those
enrollment?
seats, yes.
And
And-
we have more because we have more students in our district? Is our quota higher?
Well, in this, if you go to eligible enrollment, yes, but as it is now, no.
So if this way that go down this path. Let's just take Quakertown, I'm not picking on it.
Okay.
It's just convenient for me.
Okay,
246 is their quota.